Weekly ADP employment change, 13,500 versus 2,500 last week. United States ADP employment change, 4-week average fell from previous 2.5K to 13.5K in November 8th. Tresek Besant will have second interview with Fed chair nominees today.
U.S. Treasury Secretary Besant, relationship with China in good place. Futures suggests Wall Street might open lower.
The U.S. dollar is lower to kickstart the new trading day. Chips are a focus today. Gold price forecast, bullion rallies to $4,118 key level as markets increase. Fed rate cut bets.
Fed's Moran. The economy calls for large interest rate cuts. ADP employment change. 4-week average comes in at 13.5K for week ending November 8. United States retail sales ex autos MOM, below expectations, 0.4%. In September, actual, 0.3%.
Hong Kong trade gap widens in October. United States Producer Price Index year over year meets forecast 2.7% in September. United States Retail Sales Control Group came in at 0.1%, below expectations, 0.3% in September.
United States retail sales year over year declined to 4.3% in September from previous 5%. United States Producer Price Index ex Food and Energy, year over year, came in at 2.9% above forecasts, 2.7% in September.
United States Producer Price Index ex Food and Energy, MOM, came in at 0.1%, below expectations, 0.3% in September.
US headline producer prices rose by 2.7% in September.
Euro Swiss franc extends gains as traders unwind Swiss franc positions. Feds, Miran. The economy calls for large interest rate cuts.
U.S. retail sales rise by 0.2% in September versus 0.4% expected. United States Producer Price Index ex Food and Energy, year over year, registered at 2.6% below expectations, 2.7% in September.
United States Producer Price Index ex Food and Energy, MOM, below expectations, 0.7 in September, actual 0.22.
U.S. producer prices increase in line with estimates in September. U.S. retail sales rise less than expected in September. Market week. Ahead, key events to watch out for. Market week. Ahead, key events to watch out for.
United States Red Book Index year over year dipped from previous 6.1% to 5.9% in November 21st. The U.S. dollar moved lower, but stalled the fall after the data dump. The U.S. dollar moved lower, but stalled the fall after the data dump. United States Red Book Index year over year dipped from previous 6.1% to 5.9% in November 21st.
Market week. Ahead, key events to watch out for. U.S. producer prices increase in line with estimates in September. United States Producer Price Index ex Food and Energy, year over year, registered at 2.6% below expectations, 2.7% in September.
United States Producer Price Index ex Food and Energy, MOM, below expectations, 0.7 in September, actual 0.22. Fed's Miran, the economy calls for large interest rate cuts.
U.S. retail sales rise by 0.2% in September versus 0.4% expected. United States S&P Case-Shiller home price indices, year over year, in line with expectations, 1.4% in September.
All right, let me reload the coffee and we will get going. Yo, yo, yo.
Gold steadies as December Fed rate cut bets rise and U.S. data softens. U.S. stocks may lack direction following yesterday's rally.
Poland retail sales growth eases to 5.4%. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, guten Morgen, comment allez-vous? How are you? You enjoying your coffee? How about all this news, huh? The big data dump? ADP negative 13,500. Oh my goodness. That could impact monetary policy, huh? So how does that impact your engagement today? Are you risk on, very risk on, risk off, or very risk off? Have you completed the poll? Our anonymous poll? Hopefully. And then we'll take a look at what Aiden thinks. ADP negative 13K. Yeah, looks like a bit of downsy. But remember, what we care about is its impact on monetary policy. So sometimes bad is good. And that's what we need to know. Okay? That takes a little finesse, doesn't it? Yeah. Retail sales, we were at 0.6 and now we're at 0.2. All right. Well, that's another miss. Two misses. Twins, Basil. Twins. You get it? Two misses. Anyways, well, how does this impact monetary policy? That's what we care about. Year over year, we've still got big numbers, but we were at 5 and now we're basically at 4. So even if it's better than expected, it's still in the downward direction. Producer price index. Okay. A little inflationary, but as expected. A little bit choppy, this thing, huh? Yep. Now we go to our headlines.
United States Housing Price Index, MOM, 0% September versus previous 0.4%.
So we've had a bunch of news. Part of this is the case Schiller. Schiller, of course, is a Yale economist. Yale. Oh my God. Who goes to Yale? Case of Schiller, September home prices plus 0.1% versus 0.1% estimate. Year over year, 1.4% versus 1.4%. What did I just say? Oh my God. Anyways, Case Schiller. Yeah. Schiller's a Yale economist. He also won the Nobel Prize, but who counts these things? And anyway, so we got this index out on real estate. And the reason we care about it is that you define GDP. Okay, let's make things complicated. How do you spell GDP? Y stands for GDP. Why isn't it like a G? Or why wouldn't you just write GDP? Well, it's nominal GDP, but whatever. Y equals C plus I plus G plus X minus M. That's how you spell GDP. You're lucky to have the G in there, huh? Yeah. All right. So why do we care about Case Schiller? Well, there's two I's, if you will, if we want to simplify things, and of course we do. There's consumer I, consumer investment. And there is business investment. Businesses don't tend to spend, they tend to invest. They expect a return on their investment. When you buy a TV, you're consuming. There's no return on investment. Now, when you get to the consumer investment, you can have housing, or we'll call it, or your retirement account. So we'll call it H or R. So there's our little decision. And what we're tracking here is the consumer aspect of I, which is the investment arm of GDP. Cool. We don't have many other measures, and it's pretty important. A lot of Americans own a house. Now, sorry, kids, you're not going to own a house. Hey, don't worry. I was in that aspect too. Imagine when I lived in the Silicon Valley and I'm a young man. And back then, $1 million couldn't buy you a house. So you needed, let's say, 1.5 or $1 million to buy an apartment. I think you needed even then more than $1 million to buy a townhouse. So let's say it was 1.5 million for your first starter home, which means you need about $350,000 in cash as a down payment. Well, when you're 27, you don't have $350,000 in cash. In fact, you have $100,000 in school loan debt. You're negative $100K. You don't just have, $400,000 just laying around. Oh, well, I'll just use my cash. So, and then you meet the old person selling you their house for $1.5 million, and they paid $60,000 for it. You're like, you're a jerk, you old man, you old coot. How dare you sell me your $60,000 house for $1,500,000? That's how the world works. So now we're kind of in that same situation where we're going to have now a generation of renters. Will that impact prices? Maybe. And that's why we track these things. Was that the sound of your bubble bursting? Yeah. Yeah. Well, so your revenge is now the old man. I'm the old man. And you're like, old man, I'm not going to cash you out of your house because I ain't got no money. Yeah. So no big cash out for me, most likely, huh? Yeah. That's all right. I got Forex. So let's take a look at our market radar. Ha ha. Uh-huh. Uh-huh. So it's supposed to do that. I was just working on it. How funny. Well, I got these working. Okay, great. Although it removed what? Let me see if I have it on here. Weird, it's here but not there. Let me publish again. This stuff has been changed. That is not supposed to happen. And none of this was a problem 20 minutes ago. So what the heck happened? Huh? Okay. And now they're all blocked. Now I'm blocked here, but the prices are correct. So let me try refreshing now. No. Let me instead do a hard refresh. Hang on, don't get all upset. Hang on, relax. And yeah, now we have commas. Okay. And this is not a dollar. Okay. And this is not a dollar sign. Okay, so I just fixed that. Good. Now this isn't supposed to happen, so well, hell's bells. This is supposed to be fixed, and it is. Okay, good. So I have validated these numbers, and somewhere on the site, I'm going to use this type of data to create a swing trading page for you guys. We have a scalping page, and I'll create a swing trading radar, scalping radar, swing radar. What do you guys think about that idea? Come on now, I'm an only child. You're supposed to tell me I'm brilliant and beautiful. Don't be shy. Make me feel good inside. Oh, Wayne, you're such a good boy. You're special. Offer discounts? No. Well, let me answer it this way. TRADARS is free. So, AK, what is it that you need? This homepage is going to change in the next couple of days, but let me go back to this. All right. So, which one do you want? Okay. Which one do you want? It's freemium, AK. Choose what you want. But it's so affordable, there's no need to give a discount. A discount? What do you mean? It's free. You can unlock a little more for less than $1 a day. You can do everything yourself for 99 bucks. If you need a little help, it's a little more. I mean, dude, what do you need? Free is a pretty good deal, though. And I'm telling you, this free is not a trial. It's not a sample. And it's worth a minimum. Okay, a minimum of $100 a month. Minimum. You want? Oh wait, actually there is one. I forgot. There actually might be one. Live coaching. Hang on, I haven't been over here in a long time. I might have done this just on the whim. Let me check. Live coaching. It's going through the security. I'm disappointed it's this slow. Hope it's just me. I don't know why it's so slow. It shouldn't be slow. It's not doing it too complicated. It is taking me through the security system, though. That's why. Jiminy Cricket. What the heck? Roll R refresh. Ooh. Well, I'm glad we kind of did this. There we go. Okay. So here we are. And you click here. Please start from the homepage. Now, this is glitchy. And we're back. So once you start here. All right, I'll fix that. That's not supposed to be. But the bottom line is I believe there is an annual AK only for the live coaching level membership, which is everything. You're seeing what's moving here in Forex. So we already looked at some of these scalping opportunities a couple hours ago inside of TRADARS in our training section. We already went through this. I was just eyeballing to see if we are breaking. Looks like pound Swissy, euro Swissy. They are breaking here, which is kind of cool. Now we can look at our implied vol. I'm just going to do this quickly. And we have this, all we've done here is Bitcoin, S&P 500, gold, euro dollar, 10-year T. Okay, Bitcoin trying to stabilize here. 1 hour low. What would we call this? Implied low is at 86.5. If we are going to maintain any level of uptrend, maybe a variation of that. I would like it to be that, but that's not what the implied vol tool is saying. I can see a lot of support in here. So I guess if I were going to combine these two, I would actually combine, I'd do a parallel here and say it's just going to take a couple hours. Anyways, okay, interesting. You've missed almost the entire move today, by the way. Okay. Oh, thank you, Hope. You too. Once again, you should know the reason we meet at 6 o'clock in the morning at traders.com for our live webinars is that this is the best time of day to be trading at 6 o'clock. So again, if you're a New York trader and you log in and you're just getting going for the day and you're like, Wayne, what am I going to do? What am I going to do with Bitcoin? Dude, you're probably not going to do well because you don't know what you're doing. Or maybe you know what you're doing, you're just doing it at exactly the wrong time. That can kind of be a strain on your success. S&P 500. Okay, once again, you've missed the best opportunities. So down in here, we're sort of non-directional, but we know based on historic norms for vol, if you are going to be a bull today on the S&P 500, then this is where we're going to be in 24 hours from now. 6750. Okay. Now, if that doesn't work, then your stops are close anyways. The second thing you probably want to do, and maybe on a higher time frame, but you want to set up tomorrow. So day traders, listen to me. Don't think like this is the trade of the day. That's, again, something that you should have done around the London Open. So if you're a New York day trader, you're really looking for tomorrow. And that's the secret to day trading, by the way. to day trade successfully, you need to plan a day in advance. So today's Tuesday. If I'm a day trader, and I am a day trader, I'm already thinking about tomorrow. So put it this way, there's only two scenarios that I would think of as a bull. Plan A, kick it off the moving average, and we're going to go up here now. It might be late, but nothing really happened today. So maybe I got lucky, or maybe nothing's going to happen. Plan B is do this later today. So maybe at the London close, maybe at the New York close, maybe at the Asia Open, and I'm going to take it north. Done. I'm done. That's it. But to not know that this late in the day, 2, maybe 3 hours after London lunch, like, oh my God. Don't be slow as molasses on a cold Georgia morning. Let me say it one more time. You should be planning tomorrow right now. Okay? So, for example, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours ago, 9 o'clock at night. This is Asia Open right here. So how do you day trade? Well, if you go to Investor Boot Camp, I'll teach you how to day trade. So when you're here, here's the day trade for today. So this is what I mean. Like, if you don't know this now, you were supposed to know this yesterday. Like, holy schnicker-schnocker. You're that behind? You're 12 to 18 hours behind at all times? Good luck, bro. So you might know technical analysis, you're just not a good trader. So now we got to fix that, right? So now you know London Open is probably when you should be entering the trade, and you're more concerned about taking profit. As you can see here, nothing's going to happen for a long time on gold. But nonetheless, you should be in somewhere here or here. Now, notice the spikes. London Open and what I call New York Open, right? Like 6 o'clock in the morning. There's your entry. So all the professionals are already done. Amateurs don't even know what to do. Professionals are already done. And here's the target for tomorrow, 42.00. That's just tomorrow. It could be higher for the rest of the week. Remember, this isn't technical analysis. It's implied volatility. So guess what? They bought near the implied low, but going back in time, that likely was the implied low. This implied low keeps updating every 15 minutes. Okay. Higher high, higher low, buy the dip off the roll reversal, euro dollar higher. Yep, that would fit the other thing. Okay, cool. So put that on your maybe list today. 10-year T-note, prices spiked and then collapsed. Whoa! So this is maybe a Fed speaker saying, oh yeah, they're definitely going to cut interest rates. Excuse me. So when they cut interest rates, guess what? The price of the 10-year T-note goes up. Oh, and it did. So something happened. The thing is, are you on the clue train? And do you know how to trade it? Do you know how to hop on the clue train even if it drives? I don't know what I'm talking about. Okay. Anyways, is this what you're going to do in the next 24 hours or not? That means the 10-year T-note's probably going to get to the psych level of 4.0, and that just might be a problem. So to answer the question, and I don't know if this is going to load or block me. I have a feeling it's going to block me. But should you be risk on or risk off today? And if so, moderately so or aggressively so? You guys, 41% are risk off. Look at that. 32% risk on. All right. And okay, this is the answer. Okay, we are in a period of negative 3.17. If you analyze, several hundred variables, both quantitatively but but relationally, it's currently a little risk off. But what you should know is, okay, the absolute number is risk off. The more recent relative number is actually quite risk off. So it's short-term versus long-term, folks. We've actually had a pretty good week relative to where we were. And yesterday, relative to where we were was very risk on. So I'm going to move this around and reorganize this and make it easier to understand and all that kind of stuff. But you could argue, well, this is where I am today, Wayne. Okay. Based on where we have been the last 7 days of trading. So you can say, well, Wayne, this is what I think. You're bullish. You're risk on. I wouldn't call that very risk on, but relative to where we were, oh yeah. And there's been a dramatic shift lately for you swing traders, day traders, swing traders, right? So on the long haul, we've had a bad November, but things are changing quick. The thing is, do you notice? I'm going to sneeze. No. Turn it up. Okay. Cool. And so maybe you notice something like Swissy is weak today. So you can say, well, what should I do about that? Well, let's look at all Forex, for example, and say, oh, okay. So if Swissy is weak today, and euro dollar is probably up. 97% of the time, that is true. So, okay, yeah. So, anyways, we have this data, which is let's go to our technicals and then be done with it. So, like we did earlier, I'm going to filter this just for our YouTube session. Euro dollar only, Bitcoin only, 10-year T-note only, gold only, S&P 500 only, and trending patterns and reversal patterns and consolidation patterns. Okay? So let's get on with it. You guys excited? Yeah, well, it is exciting. All right, so let's go through our routine. Just as a reminder, we're going to look at all those patterns, which are like 20 patterns minimum of 5 time frames. So there's a minimum, I say, minimum 100 possibilities that we're going to look at right now. How long does it take me? I'm done. So I looked at 100 potential patterns on 5 different time frames, right? So 20 patterns on 5 time frames, 100. There's only one. And it's on the daily chart, and this is bearish. Done. So weakness with an opportunity for bears. If you're a bull, back the truck up. Okay, see how easy this is? Okay, crypto, are you bullish or bearish? I'd like to be a bull. Why? I don't need to tell you. Because I got all my fundamentals. I looked at them. Maybe it's just psychological. Maybe I just like Bitcoin. I like it. I like it a lot. Okay, cool. So I want it to go up. I'm a bull. Doesn't even matter why, right? Cool. 15-minute chart. It's bearish. With an opportunity for bears, definitely not an opportunity for a bull. So bulls, don't trade the 15-minute chart. It ain't happening. Okay, well, what about on the hourly? Well, we need a higher high first, then a higher low, and then buy it around B, and then take it north. So it needs to go from where we are, we'll call it, what, 87? To 90, and then catch it around 88, and then long bomb it. So you got the right idea according to pattern recognition on the hourly, but you're a bit early. Because these haven't happened yet. They're still emerging. That's the nice thing about this. It's looking forward. It's saying, if it goes to here, then buy the dip. So it's forward guidance to the potential of a generally accepted pattern. This isn't like some proprietary thing. These are generally accepted patterns, and we're simply looking at the charts saying, woo, that looks like a head and shoulders might be forming. No, that's not head and shoulders, but if we saw one. And you might see, a left shoulder and a center crown. So now we need a right shoulder, and then you have a sell. We're not saying you should buy it or sell it. We're saying these look like generally accepted patterns. It's pattern recognition. Okay, now we go all the way out to the 4 hour. What does this say? Up? It says buy? No, this is not a signal. Okay, you need to think like a boss. What does it mean? This is a triangle. It's sideways. It's non-directional. It's a consolidation pattern. But if we head this way, then the pattern will change, and it'll be a channel up in which you buy dips. It's just, it could potentially do that because we're in the apex of the triangle. So if it goes to here, then you want to buy a dip because it's no longer a triangle, it's a trend. Okay? Now that's cool because it hasn't happened yet. And that's, if it's already happened, it's a lot less valuable. But for the things that have already come to fruition and you want to catch, you want to nibble on the few, kernels of corn on the corn cob, you go over to the sentiment tab and then click on the scalping. Yay! You guys ready for the 10-year T note? Lovely. Once again, 15-minute, nothing. 30-minute, nothing. Hourly chart, nothing. 4-hour chart, nothing. Daily chart, slightly bearish, and I want to be a bull. Now, remember, it's not a prediction. It's just when you connect this bottom, okay, if it makes a lower high, then we have a problem. Now, I want this to go up. So I might be looking at this as, okay, a breach, kick it off the moving average and take it north. And then what happens? Then the pattern changes because this is emerging. It hasn't happened yet. So once you get, let's say, above here, well, it's certainly no longer a descending triangle. It'd be some other pattern. So you can trade it like this, and that would be a breakout pattern. Or you can just buy a dip off the moving average, and you're just doing price action. Like maybe you don't care about this price action. You don't care about that price action. You don't care about that price action. You don't care about that price. What you care about is the current price action, which is higher, high, higher, low, ride the moving average. Cool. Well, you do you. But you have to know how to trade. Otherwise, even me giving you a descending triangle that might be emerging on the 10-year T-note daily chart, it's useless to you if you don't know how to trade. And by the way, if this goes up, what does that mean about monetary policy? Well, most likely the Fed funds futures market is pricing in a cut in the December meeting. And what would that do to the dollar? Once again, you have to be able to put these things together. If you can't, you're not gonna succeed. You're just not. All right. You like gold? Who likes gold? You like the gold? Gold is nice. Have gold. Maybe I'll get gold teeth. I don't know. Let's take a look. Up, down, sideways, and reversal patterns on 5 different time frames. How long does it take me to analyze 100 potential opportunities and threats on gold? 3, 2, 1. I'm done. 15-minute, hourly, and daily. That's it. There's nothing else. There's no other reliable, repeatable patterns on the other time frames. Looking at those charts are a waste of your time. Up. Okay. We have a down channel. And it was pointing down because here's what it's thinking. It's not projecting. It's not doing fuzzy logic. It's not doing like a neural network like our fundamentals and our sentiment tools and our risk tools. They very much are. This is just a pattern recognition tool. Cool. Now, I want gold to go up. What can I say? So this says it's been down and the leg was down. So am I depressed that suddenly it's up instead of down? No, I love it, dude. So I'm looking for this now. This is what I'm looking for. But this just a lousy, stinking, no good 15-minute chart. Is there any validity here? Well, it would be a kick off the moving average scenario, which would be very bullish on this time frame because we were supposed to drop, basically back to 4,100 and then kick back up. But it seems like we're taking the first opportunity, which is a role reversal, moving average play. So it's an aggressive bull move. And the market is treating this as support, not the lower one. Cool. What about daily? Well, we went up and we've been consolidating up and down and up and down and up. We're entering the apex, and the closer to the apex of the pennant, which is a type of triangle, but it's directional. The closer to the apex, the more likely it's going to break out, not fake out. So a pennant in this case is kind of like this. There's a pre-established condition of bullishness. So we peak, so we have a higher high, higher low, lower high, higher low, lower high, higher low, and we get to the apex, and this pattern suggests in the past we find our direction again. So even though this is a daily chart, imagine it was a weekly chart, and all we did was this. Now you can look at seasonality and say, was that normal for gold? Is this a good time to buy gold? You guys know how to do that? Okay. You can do this whenever you want. I went back to that funny color. Interesting. Just didn't do this yesterday. That's strange. These bugs didn't occur yesterday. Okay. Cool. November, December. Isn't that cool? You're like, that's cool, Wayne, but can you make it easier? Okay. Okay. So that's how you do that. Easy peasy lemon squeezy. If you got a problem, I'll solve it. Check out my hook while my DJ revolves it. DJ Aiden. Oh, we got to do the transition. S&P 500 and so cool. Okay, now let's get back. And we have a wedge. It'll look like a threat, but we might be popping back on the moving average. Open up your S&P 500. Do proper technical analysis. Do it on a maybe. Put it on a maybe list. But as we already know, you're probably 4 or 5 hours late. But whatever. Maybe instead of getting mad at me for being all pissy on your trading strategy, just say, well, maybe he's right. Maybe I should start doing technical analysis based and be ready for tomorrow. And you're like, but Wayne, I can't get up that time of day. Learn how to swing trade. Learn how to day trade. I have a whole course on the Asia fade. Like, you might be very good at technical analysis, but you not be a very good trader. And so if you can learn some basic tweaks, I don't mean change what you're doing. I'm saying make better informed decisions. So if you know what to do, but not when to do it, how important is what to do if you don't know when? Right? So you kind of have, I mean, think of it this way. If you look at these charts, there's two pieces of information, time and price. So if you just go in and say, I don't know anything about time, I only know price, I don't think you can be consistent just mathematically. You might get lucky here and then. But you also might get unlucky and you enter good trades at the wrong time and it doesn't pan out. So think about your charts. You have to know things. But you also know not just timing like time of day, like the implied volatility tool, right? Like the implied volatility tool tells you that. But this tells you when in the year, what week, what month, what quarter do things tend to happen, right? And then you go to implied volatility, and it's what day of the week and what hour of the day. But imagine you didn't know any of that. Okay. So let me tell you, the sentiment tab, the entire tab is part of the free tier. This Squawk Box is worth a minimum $100 a month. Minimum. And what you do is you just let this run while you're trading. So you hear the news as you trade, right? You don't even have to read
AVE
it.
price forecast, AVE tests, May levels as network's RWA lending market grows.
Euro, US dollar. Forecast, advances on weak US data, dovish Fed rate cut outlook.
Euro consolidates in lower 1.15s, Scotiabank.
Okay. You get the market, you get the news. Look at these are scalp spike analytics. We have our scalping analytics. We have our implied volatility, which is great, basically a measure of price action analytics. And not just for these little, few that I chose. All of them. You can have all the commodities, cryptos, Forex, stock indices, and individual stocks that we track, and we track a lot of them. I don't know why that's not updating them. But anyways, it's all free, guys. It's all part of the free tier. Yeah. I just want to keep you close. Peace on earth. May the pips be with you. May your profits be above average. Thank you, Traders Way. Remember, you need TRADARS to make logical, intelligent decisions about every single trade. And then you should execute through Traders Way. Yeah. If you do, Traders